Welcome to the Foundation for the Study of Cycles. My name is Lars von Thienen, and today we host another session of our weekly Cycles TV series. Today I will review the Dow Jones market data and the cycles in the current Dow Jones Index for you. So this is the topic for today. Just 20 minutes reviewing some cycle in the Dow Jones Index, because this was requested by some members out of the community. And during the last sessions, I mainly use the S&P and other ideas to discuss with you today. And therefore, I think it's also a good idea, and therefore time today using the Dow Jones Index, having a look at cycles and showing the basic cycles in this index from weekly, daily, and also I will go down to intraday data on the Dow Jones Index. So that's it for today. Let's jump in. At the end of the session, as always, please drop in your questions in the live section. So I will be here and try to give the main answers to you, that you also benefit from staying live with me here in this session for today. Okay, so let's directly jump in the Dow Jones dataset for today. So where do I start here? Before we get back to the situation of today, April 12th, I will review a little bit the history of the cycles, because once you dig into the cycle for the Dow Jones for today, which we will do in about 5 to 10 minutes, but you always should have an idea of how the cycles have evolved during the last weeks or months. So if you analyze daily cycles, you should always be aware of how the cycles looked during the last weeks and months in the past, being able to better judge the current situation of the cycle. So therefore, this is the Dow Jones Index going back into August 2020. So this was August, September, end of August last year. And I mean, this is the standard procedure. I will not repeat how to select these cycles. We go to the spectrum data. We pick the most important cycles based on your nominal model, based on the harmonics. Please review the last sessions of the last 2 weeks to learn a little bit about the nominal model and the harmonical model. I will keep it simple for today. So this is the main cycle, which is shown here, a length of 168 days. And during that period, the cycle length of 170 plus minus was anyhow the dominant cycle we saw during this time. So it's just selecting this cycle here, which I just did at this point in time. And I will start here because this cycle length was very helpful during the year of 2020. Even also, it projected the high end of August here in the Dow Jones. So this is the out of sample data, and I can just show you then how the market behaved afterwards. So this is the light blue here, but in picking the top in the September area here, yeah, when we zoom in, this worked out. And then something special happened, and we discussed this already. So from the short time perspective, so this was the point the high was expected, coming off a very strong up move here in the main market, so which was aligned with this cycle here, the cycle top here and the low here, then a strong up move, and then projecting here the end of this up move, which clearly happened if we just go into this area, because after this point in time, the market then turned down. Yeah, at least this is what you see here, or at least a sideways move until the midpoint of this cycle here. So the cycle helped us in showing this uptrend will come to an end, which was coming to an end at August, September 2020. Then we had some down, up, down move here into early November, which is quite lower than the point where we made this projection here. So this was a sideways move, which in regards to cycles can be counted as valid, because if a strong uptrend ends, or to say it this way, and we go into a side wave, then the cycle is active here. But then something happened, because the cycle projected a downward move into the period of December 2020, which obviously not happened. So, and I picked this example because it's always important also to learn from the kind of failures, because it's easy to pick cycles which worked perfectly in the past and showcase this. No, I will pick an example here which failed in end of 2020 because the cycle was still detected here. What's important here to observe, and that's always interested, or I will always recommend have a look at the midpoint of the cycles in times of length here. If we use cycles for market analysis, it's only for timing purposes. We don't use cycles to project the up or down swings in regards to the price. We try to project or find turns in regards to time, not to price. So that's always important to remember. So if I highlight the midpoint here, I'm talking about the midpoint of the cycle time, so the half of the length. So this is the midpoint of the cycle, and that's exactly where this cycle went out of sync, or I will not talk about an inversion, but at least this is often the kind of point at the midpoint of the cycle where cycles might go out of sync. And this is what happened here. So it does not mean that it must happen always, but if cycle goes out of sync, it often happens at the midpoint. So, what to do with that? So that's what I want to explain further. So, And since then, so we discussed this in December and January and February, why the cycle went out of sync, because the cycle was anyhow still detected. Yeah, so it's not that we have a new cycle. The cycle, the one possibility is that another dominant cycle will show up in the analysis a little bit later, so that the dominant cycle shifted to another length and another phase, not only shortly. So another dominant cycle will show up, or that its cycle might also come back into the dominant cycle. So we've anyhow not talked about the higher time frame, the weekly time frame, and not talked about the lower time frame, but this will get more complex here. So and at the next important time here, so then it's the downturn. So if you can flip the half of the down cycle here to the upward, and then this is a kind of inversion here. But let's have a look at the midpoint here. So where this cycle has gone out of sync and completely turned the other way around. So that's the case where we are coming from and which we discussed during December, January. If we move forward in time, so this is what I did here with this analysis here. You see that we progressed until December. So this is now using the data by end of last year, where we went out of sync here. The markets start or continued to move upwards here. And this is where the cycle low was projected here. You see at this point in time, there's still more or less the same dominant cycle active in the markets here. So I've just picked the one which is standing out here, 172 days. You see it switched slightly in regards of length and phase. If I go back to the previous one, it was a length of 168 days, but don't count this too serious. If it's 168 or 172, it's still the same cycle here. And this is what I mean. So the daily cycles have not given us any new clue. So it's still the same cycle here. But what could happen now is that the cycle comes into play again. So now we need to have this cycle always projected the next top here mid second half of April 2021. And you know what we have today for a date? This is where we are now. So that's why I recall this analysis. This won't have helped you during the period of December and January, at least not this cycle. You need to have weekly cycles or intraday cycles. But now this cycle is coming important again as we are approaching this projected top here. And I recall this analysis, which we used often during the last year, because it stayed very stable. So it doesn't mind which point in time you have used during your analysis during the last weeks on the main markets, and you could use the S&P also with similar outcomes here. Here, the important takeaway is that this cycle has been stayed stable since September last year. So, and this is important to monitor, even though since this midpoint here, this cycle has become out of sync. But now this cycle often comes into sync again. So just during the last 2 to 3 weeks, there have some other noise. If we just look at this cycle, there has been noise in the markets, which masked this dominant cycle here. There could be other cycles, but let's not get too complex here. But now we really need to take or can get back to this cycle because we are getting into this period here. This was projected as next high since September last year. So this, if I go back to even the projection here from August 2020, and I can even plot it more into the future, and I will get back to today in a second. So you see here, so this was the projection done in August last year with this cycle with a length of 168. And the next cycle top was projected for 8th of April 2021. So this is exactly more or less today, yeah, if you don't take it exactly on the day. So that's why this cycle is now becoming important again in today's markets here. So that's the past, and that's why it's important to understand how the cycles behaved in the past so that you get a sense if you now move fast forward to today. So if I can now update the analysis even to today's point in time, you will see that we still see the same cycle, yeah, and the same cycle length observed in the markets since August last year, with not another dominant cycle showing up on our spectrum here, which is clearly standing out this cycle here. The length is shifting, the phase is shifting. We have been out of sync here, but nevertheless, this cycle might come back into his sync here. Even if you browse the history of this cycle, this happens often, so skipping half of a cycle here at the midpoint here. So from the daily point in time, we are back at another important cycle projection here, not just today. So this projection was there since August last year, if we have a look at the daily chart at least, okay? So that's one topic, just the Dow Jones. You will have a similar analysis on the S&P and other indices using that. Another daily measure, and now you need to confirm this higher time frames, lower time frames. Another data set I often use and recommend is some kind of sentiment data sets. And one obvious measure for sentiment is the Volatility Index, often also called as Fear Index. This is from the S&P, but it's the same if you use the volatility for the Dow Jones Index here. So here we see kind of same story. And this was interesting during November, December, January. And I think some out of the community also mentioned that the dominant cycle in the Volatility Index and the main markets have not been in sync. So, and this is what I show you here. So this is the Volatility Index, and picking this analysis just picking in January this year. So that's not today, just going back into January. And here you see the dominant cycle of the Volatility Index clearly standing out, the length of 177 days. And here, remember, it's a similar length, 170 something, so it reveals the same cycle length. But now showing here the expected cycle low. Yeah, you see it here. What's shown here as the low point. The expected cycle low is 12th or 13th of April today. So, you know, this projection was done in January this year. So in January, the low of the Volatility Index, you know about. A low in the volatility index will be the same as a high in the stock market. Yeah, so you need to read it vice versa. So, and this projection is now getting again in sync with the main markets. So if you have observed in November, December, January, you have seen that the projected highs and lows of the volatility index and the main markets have not been in sync. That's a kind of indication you can't trust the cycles at that given point. But now it's interesting, and that is happening today, that these both cycles get back into sync with another important point in time which they are projecting, which is more or less today or this week, yeah, to say it this way. So now we have this cycle back in alignment on the stock market, the Dow Jones Index and the Volatility Index, both projecting, at least from the timing perspective, we could see an interim or at least a kind of top in the markets. We don't know the amplitude of this move, but we are back in sync with the same cycle here. So that's the daily data set using the Dojo and the volatility. I need to get back, or you also always should monitor higher time frames like weekly and monthly data series. I will just make a short side note here because this was reviewed, I think, in February. We did this year on the channel. In February, I showed you the National Association of Active Investment Managers Exposure Index, and we did run a cycle analysis on that. That's a weekly data series, yeah, which shows you the exposure long short of professional investment managers, and we have reached at the point of the presentation we did here in February. We saw a major or projected major turn. I think this index was here at the top. I think exactly at this point in time here, when this index reached the top end of January, beginning of February, we published this analysis because the cycles, which you see here on the projection line, started to turn down, indicating that the professional money managers will shift their portfolios, going back from these heavy long positions and reducing their long positions into short. You see from the, and you can review that, our projection worked out nicely. So exactly this happened also. So the professional investment managers reduced their long positions during the last weeks, which is also a leading indication getting into the stock market. So at least the markets will not turn abruptly when you see this kind of behavior. But we saw this on the weekly chart, and we showed it here even in our blog that we expect the professional money managers going out of their long position, which happened. Now the daily cycle is joining this cycles parade, to use some Dewey terms here. So the daily cycle, which I showed you on the VIX and the Dow Jones Index, are coming now into alignment of the longer term cycle. So monitor this. And now to even complete this kind of analysis, if you want to time entries and exit based on cycles, the daily time frame is or let's get back to our daily analysis here of the Dow Jones Index. I've shown you the history. I will update this to the current point in time. So that's the daily cycle of the Dow Jones Index here. If you want to use this to time your entries and exit based on daily, you need even to go a little bit lower from your time frame, because you know the cycles will shift, yeah, in regards to their topping and low. The cycle is never as static as indicated here by this plot here. It will shift. So therefore, to better fine-tune your timing signals, you should even go one time frame lower, which in my case, what I recommend, not going into intraday trading now, but if you use a 2-hour time frame now to fine tune a little bit when the market is really showing a turn, the 2 hours chart might be very helpful to better now your entries and exit if following this daily signals here. So the weekly indicated, now the daily is coming into alignment, but now you need to find the right day if you really want to get in or out of the markets here, which I would never recommend just doing alone here on the daily side time frames. Just to show you, I've just uploaded the 2-hour the 2-hour Dow Jones trading data here in our cycle analysis, which you can also do on your own. So just go into, if you don't know how to do it, go to settings, my data sets, and then you can upload your own data sets. So you need to have 2-hour charts of the Dow Jones Index, but I think that's not too complicated these days to get this kind of data. Okay, so I've just done this for you. So this is the 2-hour Dow Jones Index here. And let's deactivate everything here. So, and we will also start back in January this year with a 2-hour chart here. Yeah. So standard procedure, go down to the spectrum and you see 2 cycles standing out. This is what I always like, not 10 cycles, not 5 cycles, not a mix of and virtual amount of cycles just to curve fit the past data. This will not work anyhow, but if 2 or 3 cycles really stand out of the spectrum, out of the analysis, it's always interesting to get into the analysis. So the 119, if there's now the 119, it meets in sequence of 2-hour bars. Yeah, so it's not a daily timing here. So the 119 is now measured in 2-hour bars here. That's always important if you move forward in time. So we can, and these 2 stand out here from the strength score in our cycle scanner also. So these are the best cycles in regards to strength and Bartle score. Yeah, so classic procedure, just from top, just activating these 2. Nothing special in the selection here. This is the basic approach. 2 cycles based on strength and Bartles. And then the second, what I always recommend here, just having a look at this, is the nice fit. Just using 2 cycles, remember 2 cycles, how nicely these 2 cycles are in alignment with the market behavior here in regards to time. Yeah, don't see the amplitude and price here, but this is a top, this is a low here, then the 2 tops here in the markets, then the major low here. Exactly at this point, major top here, and then moving forward, major low here, and then a top here, and then moving forward, indicating another top more or less during the next 4 to 8 hours following this data set here. So this is always interesting. So if 2 cycles which stand out in the spectrum, so they are really detected here and can track these 2-hour behavior, always have an eye if these cycles have been active before, but you also should have the history of cycles ready, but I will do that now. But let's see how this projection worked out here. So just following this projection in January of the 2-hour chart, you see here that at this point in time, and if I deactivate the out of sample data, it projected a kind of top here. So during the next 2 or 3 hours, and then a down move into this period here. So, and if you see the live data, this is exactly what happens. So at least the market stopped the up move here and then moved down into exactly this point in time here from the timing. So the projection, and then the next up move followed into this projection here from the next top, and then the next low followed. So I just start with the history, and then I will get back to today in a second here. But I want to show you that in these times, even when the daily might not be in sync with others, you can also get down to shorter time cycles, at least if you see this nice fit. And please remember the lengths of the 119 and the 87 multiplied by 2 hours in regards to the chart as the cycles, because I will get back to these cycles in a second. The other topic to keep in mind when you do this kind of shorter term analysis, never go longer into the future than the next 1 or 2 turns. Yeah, even though you can plot the composite long into the future, what I did here, these cycles do not stay static all the time. So when you do this kind of composite cycle analysis, just look out for the next 1 to maximum 3 turning points. Then you anyhow need to update your analysis. So in this kind, we could use this as a next timing point and this as a next low. So these would be the only valid timing indications you could use here. Never go more further into the future of this static projection here. But this is for any composite analysis you're doing here. So, but this was the 2 hours just in January, and you can continue this analysis on your own. And now let's fast forward to today's markets. So I will include now all data in the series. And so this is now, I think that's this morning, yeah. No, at least that's Friday evening. So it's not updated by Monday, not today, but at the market close of Friday. So this is the latest 2-hour chart data here for the Dow Jones Index with Friday's market close. And the analysis, I will get back to your questions in a second. So again, standard procedure, and we see 2 cycles here in the spectrum standing out: 119 2-hour periods and 85. Do you remember which dominant cycles have been there in January, so 3 months back? That's why I showed the example of the past. I think it was 87 and 119. So similar to the daily chart where I showed you this 170-day cycle, which is active or at least available for us from the analysis since mid of last year or even beginning of last year, and getting into an important projecting time from the daily series, there are 2 important 2-hour cycles active since the start of this year. So and that's always this kind of, if these cycles are active over a long period of time in the markets, and that's why, just browse back the video or review it. I just showed you a second ago the 2-hour cycle analysis from January this year, where we saw exactly the same 2 cycles standing out. So important here is to keep in mind, it looks like that on the 2-hour chart, there are 2 key cycles running since January, and I've shown you the alignment in regards to the market data. So let's also bring up these 2 cycles now for our analysis for today. So we don't want to talk about the history, we want to talk about today. And you will see that here was the first top, and here's now the second projection, which is again during the next 5 2-hour bars, with means during the next 2 days, 2 to 3 days. So rolling this analysis down, I showed you the weekly series. I showed you now getting back to the daily series, getting back to the still valid cycle now in the daily series, getting back to an interesting point in time in alignment with the volatility on the VIX index. Now also getting more detailed on the 2-hour charts, where we see the 85 and 118 dominant cycles on the 2-hour time frame also now getting into play. We don't know the amplitude of this move, so we can't project the amplitude, but this is the timing signal we are looking for here, which is, at least from these 3 time frames, just around the corner. So that's why I wanted to spend these 20 minutes, or we are running now for half an hour, to just an view on the current markets, which we use the Dow Jones Industrial Index for today. And just a little bit showcasing 3 different time frames, how to do this. Okay, so this is the basic procedure. This is a very interesting point in time. So I think in 2 to 3 weeks, we will see. But at least I hope this is also something you can repeat, and this helps you a little bit in your own analysis. So that's the main topic for today. I will now get into the questions and answer section. So therefore, I will get back to your questions. So now please get into the live section, and I will go back to all your questions. Okay, I will just browse them topic by topic. So there's no priority now in using this. So as always, let's use this next 15 minutes to go over your questions. So Mark, could you add a checkbox to the cycles table to invert the cycle, or choose your own phase? Yeah, that's an idea. It's just the question of not making this application too complex and You need to know when to invert cycles and not to invert. I mean, I don't need to tell you, you know about that. But if there's a simple button to invert a cycle, the cycle forecast gets complicated more and more, even for beginners. So therefore, I think in the advanced section it might be useful. So I will take this idea into account, as I explained in this video, to flip it around. So you can click a button and the cycle will flip, or the face will just turn away. Yeah, I will take this into account. Not sure if this will show up shortly, but as you know, if you reviewed the last weeks, we are happy to pick up your ideas and put this into practice. Okay. Stan, in my spreadsheet for the time period 17 to 20, I calculate 836 trading days. What disparity you are meaning here? So I think you're talking here about the same numbers. Trading days, program shows trading days. Stan, please maybe get a little bit more into the detail here so that I can understand this. Mark, also an option to add one's own cycle. Interesting. So you put in, so just plotting a cycle. So manually entering kind of phase amplitude and length and adding this to the chart. Yeah, so why not? Like a kind of cycle plotter. Okay, I'll think about it. Stan, I now see your point. Sorry for that. You're talking about the program shows 167 trading days. I calculate 136 trading days. Okay, so just two quick comments on that. Why the difference can be. So the program is calculating in kinds of bars. So I don't know if it's trading days. If you feed in trading days, then the output is trading days. If you feed in calendar days, then the you will see calendar days. And there's one option in the program where you can close gaps at least during a trading days. And when you calculate 836 trading days, can you please add some information how you calculate the 133 trading days so that I can maybe comment better on the difference? I need to understand your way of calculating these 836 days, and then I need to get back to it, or maybe drop me a mail with the details. Then I can analyze it and get back to you personally. I've posted my contacts here in the live chat, so feel free to use that, even though please allow a little bit of delay in answering. Can we analyze more than 50 bars? Yes, for sure. You can analyze more bars. You just need to load more data into the scanner. So how to do this? If you, or let's get back to it. So, oh, sorry for that. Let's get back to the daily. You need to upload more data. Oh my God, what I'm doing here. So, and if you have this data loaded, the range option should give you the possibility to load more data on your chart. So maybe 5 years, and this will not automatically being automatically added to your analysis. So in this case, it is added. Okay, so this is the full data set for the Dow Jones, which consists of 900 bars. But let's switch to another data set here. So for example, the S&P. There we have these 800 something days. This is more or less the standard setting. But if you now add more data, so you can always press the plus 1 year, which will add 1 year of additional data in the past, which you see here as light blue data. So it is added, but not taken into account for the analysis. If you now want to extend the analysis also to that, you need to press the reset range button, which will now include also this history in your analysis. And now, as you can see here in the sections, the analyzer is using 1,200 something bars. So the analysis range can be changed by you. You just need to add more data, use this +1 year or this maximum button in the range, and then update the in-sample usage with the reset range button shown here. So Aquarius, I think, thanks for the question. I think that's an important one for lots of members using that. Okay, so oh my God, how much questions are rushing in. So let's see that we don't overshoot here. Maybe just when we switch to a 2-8 data set and find, as you did, then 109 is that cycle of 9 bars, and then we convert it back to days. Yes, yeah, exactly. That's what you can do. So if this is a 2 hours cycle, you can convert it back to days. That's right. So that's just then. Let's be careful here in doing that, because it depends how the chart setup looks on your 2-hour chart. So it's a very good question here, but we need to be important if we roll this or recalculate this into a daily chart, because let's get back to this 2-hour chart I used here for this example. So that's the 2-hour Dow Jones chart here with up to today's data. And let's just get rid of the cycles here. I will now make this a little bit larger for you that you can follow this. If you see how the bars are formed, this means that there are not continuously every 2 hours. It's just during the market open. Yeah. This is the 2-hour charts here. So and it depends on your time zone, how the time will show up here on the chart. But in my case, I think the first bar starts at 1:30, then 3:30, 5:30, 7:30. So these are the 4 2 hours bars I get for each day. And then the next day starts at 1:30 again. So we don't have a continuous time frame here based on 2-hour data points. It's just 4 bars per day. So there we need to recalculate a little bit different to convert this into trading days, because we don't have continuously 2-hour bars for each day. So we always have a gap during the market close, which is not charted here. So therefore, we need to be careful with just recalculating this into days, into daily series. So it's not as easy. I hope this gives an indication. But in general, you can convert. That's absolutely right. You just need to keep an eye on how the time series is here on the chart, and there we have gaps in the market close. Therefore, it's not as easy. But in general, exactly that's the approach how to do this. Okay, Bernard, can you remind me what's the difference between the phasing score and the phase score in the dominant cycle box? Yeah, the dominant. I will give a short info on that. The dominant cycle, which is shown, is a special kind of cycle analysis we are doing here. It's a special subset of the standard analysis here. And if you go down, you see a phase score and a phasing score. I would first, the phase score, it's just the mathematical phase, which is normally in Bogenmaß or radians shown, which is the mathematical term. It's here recalculated between -100 and +100. I won't go into the details here, but that's the normal sinus phase of the cycle, which is also shown in verbal here, uptrend neutral. And the phasing score is a more complicated combination of 2 cycles. So please ignore the phasing score for now. The phase score is the normal phase. The phasing score needs more explanation. Maybe you don't ask that but a colleague of you asked that about why is there a different, or sometimes there is a different in the dominant cycle length, which is 85 here in this case. And this cycle might not show up in the cycle scanner, or with a small different amount. Maybe that's also the case anyhow on the daily time frame. So in this case, it does not match. In order to match the dominant cycle length and the scanner here, you need to change something in the configuration panel, because the Explorer is using a dynamic in-sample range. And the scanner is always using the full range. Yeah, so the cycle scanner, which is using the spectrum and the cycles in the table, is using the full range of the in-sample period you selected. I showed you to extend this beyond 800 bars. And the Explorer is responsible to show this dominant cycle box below your data set, which is normally using a dynamic historical analysis. I call this dynamic because often you're not interested in the overall history of your data set. So the dominant cycle is just looking at the current point in time, therefore it's dynamic. If you want to mimic the data of the scanner, you need to set this to full in-sample range. Then the scanner and the Explorer are using the same historical data set, and then the dominant cycle lengths will match exactly with the table here. Bernard, maybe not exactly your question, but at least please ignore the phasing score for a second. I need to get more into this in additional lessons on that. Okay. Mike, if we wanted to go one data period below smaller than 2 hours, what should we try? Then you get back into intraday trading. So I would use the 2 hour, which I introduced here, more to fine tune the daily signals. Yeah, because you know that there is a theoretical cycle. It will never exactly show up at the peak of this static sinus plot or composite plot. So therefore the 2 hours used to fine tune the daily chart. If you then get into intraday trading, maybe during the day, then the next logical period would be a 1 hour chart, maybe 30 minutes. But if you go below 1 hour or 30 minutes with cycle analysis, there is a lot of noise in the markets, which is not easy for cycle detection. So if you go below 1 hour data, so 5 minute or 1 minute data, there will be lots of false signals because of the large noise. So then if you do that, if you go below 1 hour, you have always multiple time frames watching. So never just use one time frame if you go below that. So if you want to go smaller, maybe use 1 hour charts or 30 minutes charts. Otherwise, then you need additional technical indicators or measurements which you confirm your cycle analysis. Okay, so please, for intraday trading, what time frame is best? You mentioned 2 hours. Yeah, that's the same. I tried to explain. The 2 hour time frame was not meant to use for intraday trading. It was meant to time daily swing trades, for example, on daily or weekly series. If you do intraday trading, for sure, the 2 hours maybe like a weekly is for the daily time frame. A 2 hour might be interesting for intraday trading. So you can start with the 2 hour chart, then go to the 1 hour chart, 30 minutes and 5 minute charts. But you will monitor this. So this requires a lot of real-time cycle monitoring. If we use the weekly and daily, we can take our time, we can use the weekends to analyze. If you do this in a real-time environment on a 5 minute charts, you have to be you need your attention on the different cycles and how to select them. So as mentioned, if you are starting with cycle analysis, don't go below 1 hour intraday analysis and don't use it for intraday trading. It's more fine-tuning the next higher time frames. Okay, Mike, cycles are a function of time. Forex market is 24 hours a day. 2 hour cycles would be valid because time is continuous. Yes, that's a little bit what I tried to explain. So if you have a data series which is continuous, so for continuously has 2 hour chart, then you can also do the recalculation of the 2 hour cycle into a 6 or 3 day a cycle, which you did. You can't do this calculation on the Dow Jones Index because the Dow Jones Index is, you have the market close. you can't see how the Dow 2-hour data is valid. It's valid because it's not a 2-hour cycle in regards to continuous time. There you are right, because it's only mapped to how the cycle was. And I go back to this data set here. Sorry, where was this 2-hour example? Here, this was the 2-hour example. So you see, it's not a continuous 2-hour cycle. That's right, Mike, and thanks for mentioning that. So this is related into the bar, how you applied it here to the chart. So this is a 2-hour chart during the trading times of the Dow Jones Industrial. So you can use this to project the turning points here. You can't just count the 2-hour bars into the future, because this chart is not continuous, right? So therefore, you're right, but the projection works the same here. You should be careful at calling it a 2-hour cycle. There I agree with you, Mike. It's not a continuous 2-hour cycle. We are using 2-hour bars here, which is showing this cycle in this data series, which is not a continuous time series. So therefore, you also always need to treat the cycle on the data series you're doing this analysis. And that's the same comment I made. You need to be careful if you calculate this into the 3 days, which is not valid because it's not a continuous time here. But at least on this data series here, this cycle works. Be careful with calling it a 2-hour continuous cycle. That's right, Mike. Thanks for bringing this up here. Okay. Can you add the 2-hour cycle into the idea section? Yes, good idea. We'll just do it after the session. So please get back into the idea section with the 2-hour chart. So there you can review this section and do your own analysis, and maybe also get back to the comments and discussion here. So can you recalculate it? It's not continuous data set. So there you should dig into these comments and discussion to understand what you can do with this cycle. Okay, Aquarius, is there a limit number of bars? To be honest, I don't think so. Maybe at 10K. Maybe we have kept this based on the membership or license, but not because we want to limit. We just need to be careful of the data stored in the cloud. But in general, there is no limitation. So you can upload 5,000 bars and you can even analyze 5,000 bars. I think some colleagues did this on gold or even long-term cycles. So in general, no, there is not a limitation. So Mike, is the 2-hour period relevant to Bitcoin also? You need to, and for Bitcoin, you have also continuous time, similar to the Forex market. So if you, I don't know, so you need to analyze 2-hour bars in Bitcoin. So I cannot answer if the 2-hour period is valid for Bitcoin. You need to bring your own 2-hour Bitcoin data here and see if you find a similar measure. And if you find a similar measure, then if you use a continuous timeline for Bitcoin as trading 24/7, then you can multiply it to get into daily cycles or even roll it down, which on the Dow Jones is not possible. And I think the discussion we did just a second ago. Okay, yeah, so I think this was trying a little bit also to get into your questions for today's session. So we are running quite 45 minutes. As always, I wanted to dig into a new data set. We have the actual data of the Dow Jones. I think I showed you we are at an interesting point in time for this market right now. I hope you get a glimpse of using even smaller time frames, even though we don't provide the data feed for that. So you need to upload your own intraday data. Which gives another combination, weekly, daily, intraday, at least 2-hour charts for daily. Be careful with the period you use on the time frame. If it's not continuous, be careful with multiplying or looking at other data sets, even though they are valid on the time frame you use. I will bring this into the ideas section so that you can review the 2-hour chart on your own to check what the 2-hour bars is using for projections. And I would say thanks for joining me today again. And I hope to see you next week on Monday for our next Cycles TV. So once a week we are doing this here. You're welcome. And I'm looking forward to meet you next week on Monday. Bye.
Hello, I'm Dr. Richard Smith, the Chairman and Executive Director of the Foundation for the Study of Cycles. I hope you enjoyed our presentation. I'd like to ask that if you're not a member of the FSC, that you consider joining so that we may continue to bring you high quality cycles analysis research and programs like this. If you're already a member, of course, thank you. Would you please consider making a donation to the FSC? We are a not-for-profit organization, and your donations and membership fees are tax deductible. Every dollar that we bring in goes to further the vision of our founder, Edward R. Dewey. Together, we can make a real difference and bring these critical reports and analyses to the next generation. Thank you for standing with the FSC, and see you next time.